Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian's the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, everybody? It's Brinks Trades coming to you live with another week of breakdowns. Hope everybody's doing well today. Hope everybody's doing well. So we got 10 people on the call. So how's everybody doing? As usual, it's where you guys calling in from. It's been a couple weeks since I've been on, so yeah, so happy to be back. Share the screen. Share the screen. And then let me drop this in my Telegram chat. If you guys are not part of the Telegram or the YouTube subscription, it's Brinks Trades, BRINX Trades. If this is your first time watching me do a chart breakdown, then it's nice to meet you. My name is Brinks Trades. I am the resident indices analyst for the Trading Nut podcast. And I've been trading for like 10 years, man. So I've been starting in Forex back in like late 2014, early 2015. Had some ups and downs for a couple of years. Finally found a strategy that got me consistent. Uh, did a lot of cool stuff. Got funded to $1 million in Forex. Recently made the transition to futures in the last year or so. Got funded $1 million through them through Apex. Yeah, so now I'm just trading funded and personal capital. So I guess needless to say, I've been through a lot in this industry. Still learning, still getting better every day, but definitely came to a place where I've seen my trading go leaps and bounds, and I just want to share a little bit of my experience with you guys. Again, first time watching, that's who I am. I'm going to share this link really quick in my Telegram chat, and we're going to go ahead and get started. But yeah, where's everybody calling in from? Don't be scared to hop on and say where you're from, where you're calling from, and maybe how many years you've been trading. All right, let me get back to the stream. All right, so Tampa, Florida. Vale says Veli says South Africa. We got Vishal from India. Hope if I'm pronouncing your name wrong, I apologize. Okay, that's what's up. So a lot of people from a lot of different places in the country. So what I'm gonna do is I'm gonna do the breakdowns that I usually do, and then I'm also gonna talk about the mentorship that I'm running. That's gonna be free on YouTube, starting tomorrow. That's gonna be a mentorship that's not. I don't really have an end date for it, but it's gonna be basically some of the concepts that I've taught my private mentorship students. And I'm just gonna put them all on YouTube, and I'm gonna see how this works. It's a little bit different format, so want to really give as many people as much as possible an opportunity to learn. There's a lot of people that are interested in trading, and really just trying to figure this thing out, really create an income for themselves. And I come from a small city in Michigan where a lot of people don't necessarily have an exit opportunity for these things. And so being able to kind of put this out in a way that people understand it and people can really use this to potentially, add additional income, make this their full-time thing. Like, that's my goal. So I really want to give it out. At the same time, I do also want to let people know this is not investment advice. This is just me education advice, intended to be education advice as I'm trading the market. So, so Jordy says Central Florida, 4 years trade finally becoming profitable. That's what's up, man. That's awesome. I'm from Indonesia, 3 years to trade and enjoy for losing money. It's fun to know something happens. Do you think it's okay? It's fun to know something happens. Okay, so I don't enjoy losing money, I at all, but it happens. And so our goal here is to really be profitable long term, right? And that's the goal. I don't enjoy losing money. I enjoy getting better, but I know the losses are a result of just trading. Doesn't matter how good you are, you're still gonna lose a trade. So um, let's see. So let's go ahead and get into it. So if you guys know me by now, if you've been following for a while, then you know that I always start things off with dollar index. And so let me pull up dollar index really quickly. So we had a couple of things that we wanted to see um, going into last week. And so mind you that last week's price action was the end of a month, the end of a quarter. And so whenever we're kind of facing price action at the end of a quarter or the end of a month, we have to kind of start to think about the monthly candle, the weekly candle, and how that's the end of the candle. And most likely we're not going to make a new high or low, a new monthly high, new monthly low at the end of the month, the last couple days of trading of a trading month. So if you go back in the calendar, I think the first was like Monday was the 30th, so it was actually the last day of the month. So I didn't expect us to make a new high or low as far as the monthly range on the candles, on the daily candle, or any of the candles that we were looking at. Um, and so what actually inevitably happened for October is we really just closed up these wicks right here. So we were trading, our all-time low for the month was at this 99.87 level. We just kind of traded back into the range to close it up. So what happened, if we look at things on a higher time frame level, right? So we saw the market really spend the first few days of the month, first few days of the month of October trading back up into this monthly fair value gap. And so this is going to be something I'm going to be watching for the rest of the month, right? So what I like to do here is give like a top-down analysis for, obviously dollar, but all the pairs that I'm going to talk about. And so new month, means a new monthly candle. So I'm going to be watching to see how we respect this monthly fair value gap over the course of the month. So it's still the first week, so we got some time. But ideally, if we're going to stick with this bearish trend that I think we might see long term, I want the market to really respect this monthly fair value gap and really find a way to continue running lower. So this is again the higher time frame bias, and it's not going to really affect us in the day to day. But over the course of the month, I do want to see this market find a reason to respect this gap and continue going down if we're going to stick with this bearish idea. So with that being said, uh, how we respect this gap over the course of the month will lead us to a longer term bias on what I think the market's going to do. So it's not going to affect us day to day. Like if we're looking at the charts on Monday, it's not going to affect us. But as the month progresses, I really want to watch this and see how the market's going to respect that level. So going down to the daily time frame, I'm sorry, the weekly time frame. Get rid of that. There's a couple things here that I don't like. And so what I wanted to see the market do eventually was come down and really take out this low here. This low here at 99.24. I wanted this market to really stick with this bearish trend because before last week, we really didn't have any. And I'll get rid of some of this stuff so you guys can see a little bit clearer. I tell everybody every week that I actually really do trade, and that's why there's so many markings on my chart. So if you guys come back and there's more markings on my chart, that's a good thing. If your mentor is not trading and he's just teaching, he's probably not a profitable trader. You probably shouldn't be listening to him. So okay, so the long-term target again over the past couple of weeks was this low at 99.21. So one of the things I like to do is just measure and see how price respects consequent encroachment in certain lows. And so we didn't really even come down to this wick here. We came down and tapped the low of this candle here, but really this was the wick that we thought we were going to see. And so what happened over the last few weeks of price action is, if we look here, we can see that we swept the low and we broke structure, right? So we took out this low and broken structure to the upside, right, by taking out this level here. So ideally, what I want to see is this market really start to, at least in the short term, transition up. And we're going to break this down in shorter time frames to see if we are going to be continue bullish on there. So I'm going to look for a couple things about that. I'm really looking at this, how price reacts when it gets to this fair value gap there. So that's what I'm going to be looking for to see what happens. So with that being said, if you look at the daily structure again too, we came down here, ran out this low. If you're a student of mine, you know exactly what sits under these lows. So we came down here, ran out this low, and then broke structure back to the upside of this. So in the short term, I'm going to be bullish on dollar, at least until we get to, get rid of this. At least until we get back into this range here. Once we get here, then it's kind of anybody's guess. And so I usually like to stay flat once I hit a level that I kind of decide is my target. So I'm going to be looking at how price reacts when it enters this fair value gap, um, and um, how it reacts once it trades back into this range. So that'll be kind of my quote unquote target for this week. So that means I'm going to be bullish, right? It's not going to say that I'm going to be long-term bullish. I'm not sure yet if we're gonna hit this gap and then turn around and go down, or if we're gonna hit this gap and just keep running through it. So I don't really have a long-term bias on dollar. But what I would like to say is that for the short term, I'm going to be bullish. So right. And so what I would like to see is the market really come down to this level and then continue going higher, at least until we hit this range, maybe as low as this high here. And the reason that it's this high is because we have buy side liquidity that sits over this. So I'm just gonna make that note that says BSL. So either at this level at 102.75, let's call it, or this bigger fair value gap, which is that weekly fair value gap. So I want to see how the market reacts to that level. And once we get to this level, then I'll have a better understanding of whether we're gonna run right through this and in search of higher liquidity, or we're going to turn around and kind of fall over from there. So that's what I'm looking at and looking for this week. Uh, so let me go back to the comment section. I think bullish take apart for dollar. Yeah. So I think we're gonna be bullish for sure on dollar. Well, not for sure. I can't always say for sure, but ideally I'd like to see bullishness go. It's a nice map which I can draw it on my own. So this takes time, right? And so it takes being able to kind of come to a chart and draw it out really takes a combination of a lot of things. The first thing is an understanding of your concepts and how you see the market and what the price should do when it hits certain levels, hits certain liquidity markers, right? And so that's the first thing. The second thing is um, uh, being able to project those things ahead of time, right? And seeing these concepts play out over and over and over again. I think what happens is a lot of times people study for a week or two, right? They hop on social media, they see the amount of people that are making money online, which could be real or fake, right? It might be real people making money, it might be some fake people making money, but they see the numbers, they want to make the money. They skip the stage where they're really supposed to be learning what the market does, and they study for like a month and they throw all their money in their account and they say, okay, I won a couple fake trades on demo. I think I can do this for real. And they don't really have a systematic approach to uh, how they're gonna become a trader, and they skip this whole phase of being able to project where they think the market's gonna go and being able to do that stuff not only in the weekly, but then also on intraday, like every day, right? So that's what I'm gonna be teaching in this mentorship. that's going to be starting tomorrow on YouTube. It's going to be a free mentorship. It's going to be a live call on Sundays. So hopefully, if you guys are interested in learning more, you should subscribe to the YouTube channel. I'll drop a link in a second. So ideally, what I want to see here is the market really run up into that range, potentially pull back. I'm going to be looking at a couple levels that it could pull back to. The first one is going to be this level here, which would be a breaker setup. If you're not familiar with what that is, it's okay. The second level here that I'll be looking at is that fair value gap that sits right above it. This will be the most optimal level that I'd like to see price run back to. Let me zoom in so everybody can see this. The second level I'm going to be looking at is potentially hasn't happened yet, but it'll be a fair value gap that'll range from somewhere in this range to the end of the low of Monday's candle. So something like that. Let's just draw. I'm going to draw it here, but it could be bigger or smaller depending on where Monday's candle ends. And then yeah, so that's what I'll be looking for is a potential 2 or 3 levels for us to hit to bounce. So I could either hit this level here or this level up here or something in between. So that's what I'll be looking for to see if it happens going into next week. But with that being said, short-term bias is bullish. So for short-term bias, I'm bullish. For short-term bias is bullish. Then if we talk about the futures market, and I'm going to start with Euro futures and then go to the indices. So, Euro USD is the same thing as 6E1. It's the same chart. If you look here, you can see the same thing, right? This is just the futures versions of Euro USD. So if I'm bullish on dollar, then I should be bearish on Euro USD, right? And that's exactly what we're seeing here, right? So if you look at the weekly time frame, there is a couple levels. I don't know if long term we're going to be bullish or bearish on this, but I do think there's a potential that we could come back up here at some point. I just don't know if it's going to happen this particular week. Yeah, it might not happen this particular week. I think eventually we will come back up here though. So for this particular week, if we're looking at 6E1, which is again the same thing as Euro USD. So if you guys trade Forex and you look at Euro USD, again, this is the same chart. Just I trade the futures version of it and I don't trade the Forex version. One, because Forex is does not have a centralized marketplace. That means each broker can quote you a different price. Whereas if you're in the futures market, every broker is going to trade you the same price, and it's more regulated. So, a couple levels that I'm looking at. So we had the market really run up above this high to close the month out, right? We took out liquidity above this level here at PSO. And one of the hardest things to do in trading is actually determine whether the market was running for liquidity or if it's going to keep running through an old high. So even I get tripped up. I actually got tripped up this week. I wanted to see the market. Last week, I wanted to see the market keep running through this high. And so I was in some long positions, probably not in the best spot. So it happens. Sometimes just like everybody else, I get caught up in sometimes the trade and sometimes I forget to zoom out. And so that's something that I've always struggled with as a trader. Not always struggle with, but sometimes it gets me every now and then. So it's okay. So again, so we ran liquidity above this high. We took out, we broke structure past this old low here. And then we took out again structure here at these old lows. So I'm going to be looking at 2 levels. I'm going to be looking at the market to really retest this particular zone here. And this is going to be what's known as a bearish breaker. So I'll be looking at, I'm just going to draw this blue. Price to either come back into this zone or this fair value gap zone here. And ideally, best case scenario for me and for the way that I trade and look at the market, I would love to see the market do something like this. But I also will be watching this zone to see how we react with this zone as well. So ideally, best case scenario, I want to see this happen. I will be looking for the reversal around here as well. So I'm going to be bearish on Euro Euro USD, or if you're calling it Euro, if you're looking at the futures, again, the same chart, just the same thing here as well. So I'll mark out the levels in Euro futures so you guys can see the price levels as well. But again, ideally, best case scenario, I want to see the market do something like this. Either trade to this level here in this zone or up to this level here and down there. So I'll be looking for either one of those things to happen. And I like the idea of going short here. It's just more clear to me. This one can be a little bit muddy sometimes. If we break things down to the 4-hour time frame, you can see that there's a huge imbalance here that we could run through into. And so what I'll be watching as I go to the 4-hour time frame, what I'll be watching to see is how the market reacts to this level here. Right? How do we react to this zone here, which is also inside of that, just inside of that breaker right there. So if we start to respect the zone, then it means we might be respecting this bearish breaker here. And that means we could be just turning over here instead of here. I'm sorry, here instead of up here. So that's what I'll be looking for. And then that level again is 1.0520 at the zone, at the upper end of that zone, and the low of that zone is 1.0085. If you're trading Forex, then that zone is going to be 1.0037, and then the high end of that zone is going to be 1.0532. So ideally, that's what I want to see happen on Euro USD and Euro futures. So when we go to, let's go to pound futures really quickly. Pound futures is going to be the same thing as Euro USD. I'm sorry, GBP USD. Let me pull up GBP USD real quick. Like I said last week, I wanted to see, I wanted to keep this bullish bias going. And so when I drawn out for my students, is I wanted to see how the market was going to react to this level. But I also wanted to potentially see this continue to go higher. And that's not what we got. And it's okay. That's, hold on one second. Hey, Kennedy. So you said a strong move to the upside, monthly candle power 3 into the monthly fair value gap. Let me look at the monthly real quick. And so you guys, when I'm trading, actually when I'm doing these calls, I don't actually look at the charts before I come to this. I see what you're saying, trading to the monthly fair value gap. That could be, that could happen. I think it's also very early in the month. So in the long term, we could see this happen, right? And so we know that dollar is going to move opposite of euro. And so on euro, we wanted to see a bearish market, right, out of that fair value gap. And so this is kind of the opposite. So I wouldn't be surprised if the month ended like this and we went still bearish. But I can't. That monthly time frame is so far out and so big that it's really hard to kind of project that. I will say that going back to the weekly time frame on euro futures, we did leave a lot of liquidity above these highs, and I think that by leaving these highs as relatively equal highs, there's a chance that we probably will come back up and grab that at some point. I just can't call it this week because I can't see it this week, right? Because we just broke structure. So it's kind of irresponsible of me to call out a bullish move for this week based on that. So it's going to be really, I mean, I think over time, I think we will get back up there. We have relatively equal highs here. We have this high that we didn't take out. So there's going to be a lot of liquidity building, especially as this level starts to pull down lower. There's going to be a lot of buy side over this high. So I think we're gonna for sure come back at that level and probably fall in line with that monthly fair value gap over time. But for this week, I think we're probably going to see a we could probably see um, a continuation of this bearish move at least for this week. So if we start to get to these levels here and um, we start disrespecting those bullish levels or those bearish levels, then it's going to be we'll probably start to see that us go back up and attack that buy side. So really, how we respect these levels, like this fair value gap here, and this breaker here, is going to let us know for this week. Sorry, I have some background noise going on, so it's kind of throwing me off. Okay, so let's go to GBP USD really quickly. So again, same thing on GBP USD, and I'll look at the futures version of this too. We haven't actually broken structure here yet. So this is actually kind of a funny thing. So we actually haven't broken structure here yet. So this is what we wanted to see last week, over the past couple weeks. And so I think if I look at pound futures, I wanted to see a bullish move is what I wanted to see. Yeah. So it's trading back into this fair value gap somewhere in this range, here, and then go higher. What I don't like, and I'm just going to jump back to GPUSD, this is a clean chart. What I don't like here is the fact that we haven't, let's see what's going on now. Okay. The thing that I don't like about GBP is that we really failed to respect this fair value gap here on the weekly. So let me get rid of all this so you guys can see. So again, this is GBP USD. So this is going to be the fair value gap. I'm sorry, this is going to be the futures version of pound. So again, we failed to respect this fair value gap here. We did come back into the zone and respect this. So there's a chance that we could continue to go up, but I don't like how we didn't respect that. So since we didn't respect that gap, there's a chance this could be used as an inverted to go lower. And that would kind of fall in line with a potential bearish move on dollar, a bullish move on dollar and a bearish move on euro. So we could see something like this. Let's hop down to the daily time frame just to get a better understanding of what we're seeing. And if we look at dollar, man, we broke structure, really. I mean, a couple of times. We took out this order block here. Let me get rid of this so you guys can see this. Right? And so let me do this. So ideally, since we haven't respected this order block here, we might see something like this play out, right? Where we could trade back into this level here. Let me get rid of some of this as well. Something like this, right? We trade back into that low right there. And give me 1 second. Give me 1 second, guys. All right, guys. Sorry about that. So, yes, what I wanted to get back to was pound futures again. So, what I was saying before I had to jump off the call really quickly was there's a couple levels that really, like, as a whole, I'm kind of interested in on euro. I'm sorry, on pound futures. The first thing is that we ran up to a couple weeks ago. We ran up to this old high here, which is I think a monthly or daily fair value gap. Uh, monthly. Is it a monthly level? No. Uh, yeah, I think it was a monthly fair value gap level that was sitting here. And so we saw the market really reject from this. And so looking to this month, um, we saw like over the past couple weeks, especially this first week of October, we saw the market reject from this level. On the daily time frame, we broke structure, right? We by not respecting this order block here. And when the minute that we took this out and traded it, we pretty much broke structure and really shifted structure back into a bearish trend. And so what happens? So what we want to see potentially here is the market really run and take out, run back into this fair value gap, and then what I'll be looking for is a target of this low, consequent encroachment of this old weekly fair value gap. That's what I want to see happen here. If for some reason we do not, since we technically have not broken structure on the weekly time frame and the higher time frames, right? We're still technically trading at that order block level right there, which would still signify that we're haven't fully broken structure in a weekly. Um, if for some reason that we do fail, like this fair value gap does not get respected on the daily time frame, then I'll be looking to continue on with that bullish trend. But I think it's a high probability here that we're going to trade back into this range uh, and then go continue to go higher. So how I'll be looking to play this week is that if we come out Sunday, Monday, Tuesday and run for this low and really grab sell side here, and then start to retrace from that, then there's a chance that we could go, continue up with this trend. But if we hit this area first, then we're most likely going to go there. So it's kind of one of those situations where you kind of need to wait and see. But if you put a gun to my head, I'm leaning more for a bearish bias on this pair. So going to the next, and it's the same thing on GBP USD. If you look here, again, we took out this order block here on the daily, which signifies a market structure shift. It's our weekly zone. So let me get rid of this. It's the same thing here. I would not be surprised if we ran up the first couple of days of the week back into this gap here and then fell over. So again, it's just showing you how the futures charts and the other charts are pretty much the same thing. The futures and the forex charts are the same thing, but again, the forex ones are not going to be as consistent across all the different brokers than as the futures will, because they're coming from different quotes. If different forex brokers are giving you different quotes, whereas the futures ones are all quoting you the same price. It's a regulated marketplace. So that's something like what I would like to see. If we are gonna have a run bearish this week. Um, Let me go to actual the NASDAQ. This is why everybody's here. So let me go to NASDAQ. NKZ 2024. Oof, that's crazy. Let me see. Let me do this one instead. Every once in a while, I get bored and I have these demo trades that I'll leave on for weeks and weeks. So if you're looking at MNQ, how we closed this week So ideally, if we look at last week, they called it a dip from our prior mentorship, or on YouTube. Um, we wanted to see the market really drop down into this range here and then go higher. And we got the first half of that, so we traded back into this zone here, this old fair value gap, this VISI here. And so from a weekly perspective, we still are on an uptrend, right? We're still looking at bullish prices. We just ran to a level of liquidity. And that's really how the week planned out. It was a very short week, choppy week because of FOMC or NFP that happened yesterday. So looking at NFP, uh, that's exactly what we got, was really just us trading back into this weekly fair value gap range, us really tacking down to the bottom of this and then just turning around and going higher. So what I'd like to see here, looking at the 4 hour time frames, you know, we broke structure back into this. We broke structure back into um, an uptrend here. So what I'd like to see here is any real opportunity to continue to use this as uh, a bullish move. So there's a couple things here that let me know that this has a really good chance to continue to go bearish. Again, so we traded past consequent encroachment of this huge wick here. We closed on that. So that's the 50% range of any wick, order block, or fair value gap or gap. So that's a good sign here. We're also above the fair hour fair consequent encroachment of this CIVI. So it's all letting us know that this CIVI is probably going to fail. So ideally, what I want to see here is find some reason or some opportunity to go back to pull back and then continue to go higher. So ideally, something like this, where we can trade back to consequent encroachment of this gap and then take things higher, right? So again, the market's giving us a lot of symbols that it wants to go bullish again. So we're just listening to those things and then having fail-safe levels just in case. And so if we look at, if we look at the 4 hour time frame or the 1 hour time frame, again, seeing an opportunity that we could run into this and go higher, start the week off. So I'll look at the news to see what's going on here, but we could make a run as low as consequent encroachment, but this seems pretty probable. So I'll be looking to see what happens on the opening of the Monday session, see how we react to that zone. 20,000, yeah. I mean, on the low end, I want to see this respect consequent encroachment, but I think there's a lot of good signs here as to us continue to run up. I'm not gonna go that low. So for Nasdaq, I'm gonna be bullish on this. Let's see what's going on with US30. So US30 is in a tight range. Let's go back up to the weekly time. And so if we zoom in and zoom in again, this will be our target. Again, we're still in pretty much an all-time high situation. So the only thing we can really run for on a weekly time frame over the next few days is that all-time high. We came back last week. All we did really last week for NFP week was trade back into this volume imbalance here. Volume imbalance is just the gap between 2 days price action. So ideally, I want to see the market continue to go higher. So I'm looking for an area that we could potentially run to on the downside. This is all consolidation. That's not good. Down to the low hour. So ideally, something like this again, where the market trades back down into two levels. This level here at 42,282, right, and stays up with that order block and continues to go higher until we hit our target, or comes all the way back down here to this low, which is that old volume imbalance again. One more time, it hits it and goes higher. But just looking at the wicks here and seeing how the price really retracted off of that level, I don't think we're going to come back down there again. So just hop into the 15-minute time frame. Same thing. I think we're probably good to continue to go higher. We could, but don't be surprised if we do get one more test down here. And again, if this level doesn't hold, then obviously we're going to sit out or shift our ideas to a bearish market structure. But ideally, this is what I want to see. Let's go to S&P or ES really quickly. Same thing here. This one played out pretty much perfectly from last week's projection. So last week, what we wanted to see here, and calling stuff on NFP weeks is very hard because the market usually tends down and consolidates at that point. So I get sometimes a lot of people that tend to blow their accounts on these weeks because they are trying to rush scenarios or rush setups and see things. And a lot of times the market will consolidate till the actual news event. And so your best opportunities to trade are going to be very early in the week. I actually tell my students on FOMC weeks and NFP weeks that we only trade until Wednesday at noon, and then we kind of just let the market do what it does. And then maybe every once in a while there's an opportunity to come in after the news event, but for the most part, I tell everybody just to stay flat and just enjoy the week because the opportunities usually aren't worth it. So with that being said, um, so we came back down. There's a couple levels that I wanted to see respected here, and the reason I had this level drawn in particular was one, this was consequent encroachment of this wick, this daily wick here. So I figured if we are going to stay bullish, we wanted to see closes above this previous wick here. And then going to the 4-hour time frame, there was this very, very small fair value gap, like stupid small fair value gap that you might have missed if you were looking. And so as we were looking for a level for us to run to, that was there too. And then also the build up of buy side liquidity. So if you're a student of mine, like if you're a private mentorship student, I think I saw Brian on here earlier. Like you guys should have been able to catch that build up of buy side liquidity or sell side liquidity that was sitting under these lows, um, and then continue to run on. So again, moving into the uh, the next week, I do see some signs here that I like. We ended the week by trading back into this 4-hour fair value gap that was formed, I think like on Tuesday. Yeah, Tuesday with the news release. So ideally, what I want to see the market continue to do here is run higher. Now, it's doing a couple things that we want to see, right? So it is trading above the top half of that fair value gap, which is that consequent encroachment level, right? I think that consequent encroachment level is at 5,787. It's also, if I get rid of this box for a second, it's also trading above the consequent encroachment of this wick. So let me zoom in so you guys can see this wick here, which is it's also trading above the half, just like I did on NASDAQ. So this is a good sign that we're probably going to continue to run. We actually took out the high on that wick. Oh, did we take out? Yeah, we did take out that. So I think we're probably going to continue upward and use this gap like an inverted fair value gap. And so all that means is that we are going to potentially use this as an opportunity to do something like this. It's going to discount this, to run to these highs. So ideally, I would not be surprised if we saw something like that this week where we finished rejecting the CIBI, came out, retested it, and on the retest, again, I would want it to stay above consequent encroachment, so this red line here, and then go higher. So that's a good sign, a good opportunity that the market's going to continue to go bullish and potentially take out these all-time highs. I'll be looking, just to be conservative, I'll be looking for price to come back out and take out this high. That'll be the target, but ideally I wanted to see, I wanted to get to that high. So if you're trading ES or the S&P, that's what I'll be looking for. And then also, if you guys have questions, feel free to obviously drop them in the chat and go from there. But that's all I pretty much have for you guys. So again, I'm bullish on all indices. It looks like I could continue to be bearish, bullish on dollar, and then bearish on some of the euro futures and pound futures, depending on how we get. And just really quickly going back to pound futures and euro futures. Really, it really all depends on how we use this gap this week. So I do think price will draw back into this gap, but how we respect this gap and that order block right here on pound futures is really gonna dictate how we move forward. If we disrespect this, there's a high probability that we're gonna run higher. Um, Same thing with Euro USD or Euro futures. How we use really this breaker and this gap. I think there's a high probability that we'll at least trade to this gap here and then continue to go down. So, but obviously, this is just going to be watching. I'm really looking key levels on Euro USD or Euro futures. This fair value gap here, it's sitting at 1.081. How we use this is going to be key on the run up. So, hopefully, you guys have any. If you guys have any questions, I'll stay on for a couple minutes, and we'll go from there. Oh, and since I'm here, I'm gonna pull up Forex Factory and look at the news, and then I'll also talk about the mentorship that's gonna go on tomorrow as well. So I forgot I would talk about that. So going into next week, um, there's not really any red folder news until wow. So FOMC is this week, and that's why. So FOMC week is in full effect. So that means I'll be looking for opportunities to really get into trades on Monday, Tuesday, and Wednesday, and then after FOMC. Really afternoon on Wednesday. So at 12 o'clock on FOMC, I will no longer be looking to trade. Uh, I will be looking to kind of stay out for the week. So all of my good trades will be done on Monday, Tuesday, and Wednesday. And so once that's over, um, I will be kind of out for the week. So this could be an early week. Now with the mentorship, so what I want to do again is take you guys to the YouTube channel. So if you guys are subscribed to me here on Brinks Trades, this is Brinks Trades. This is my YouTube channel. So I will be covering, doing a mentorship that's going to start tomorrow. We are going to run through the Forex markets first, right? And depending on how that Forex markets um, mentorship goes, then maybe I'll bring it to indices. Maybe I'll just stop doing it, the free mentorship altogether. So it really just kind of depends on that. So really what this mentorship is going to cover is going to be a very basic breakdown of what's the Forex markets for the first couple weeks, how to read the charts, all these things that if you're a brand new trader, then you can use these and kind of get a little bit more proficient. It's going to break, then it's eventually going to break its way to our overarching how I trade these markets and my actual approach. So the first couple weeks are going to be introductory. The next few weeks are going to be how to read the charts, how to start looking for liquidity, how to actually formulate these ideas into strategy. At that point, we're going to talk about a few different strategies that a few different models, I call them trading models, on how I trade the market, depending on what your time frame is, what your schedule is. This is going to be more of since this is a public mentorship, it's going to be less inquisitive. There's going to be less opportunity to kind of poke questions uh, at me than I would for my private mentorship. But it's going to be a format where you guys should be able to come on, learn as much as possible, and I'll dive it down week by week. Everything will be recorded. Everything will live on YouTube under the live section. I probably will create a playlist for that. But again, it's going to start with introductory. What is the forex markets? What are the major currency pairs? What are you going to do? What are the main sessions, like that type of thing for the first couple of weeks. Then we'll slowly integrate our way into the idea of trading with liquidity, market structure, then formulate that stuff into strategies, and then what that looks like for executing trading ideas. So it's going to be top to bottom. If you've never traded forex before, or just traded period, it should be a good introductory least for the first few weeks, and then it'll start to get heavier. So if you have any questions at all, please feel free to hit me in Telegram or hit me on social media, Brinks Trades, like here, or any social media that I have, Brinks Trade at Brinks Trades, or again Telegram. And so I'll answer any questions if you guys have anything here. But it should be a good top to bottom strategy. So by the time this course is over, you should be able to take this and really, build something out that you can actively trade with. Again, will not be as hands-on with my mentorship as the mentorship students that I have in the past. If you guys are a private mentorship student already, you guys can always hit me in the chat after every class. But that's kind of like a thing that's more reserved for the people that have actually, paid me. But you should get a lot of value out of this as well. So if you've already taken a mentorship class, it should be a really good review, or it should be a really good opportunity to build on the concepts you already have. If you've never taught from me before, it's a great introductory to learn a little bit more about how I trade and maybe walk out with some stuff that I actually help your trading as well. So yeah, so hopefully that answers the question. But yeah, so if you aren't subscribed there, like subscribe if you're not subscribed to the YouTube channel. Um, and hit the little notification bell, and you should be able to be notified every time we start. The mentorship classes should run. Um, I want to say I'm going to try and do these at 2 or 3 o'clock tomorrow on Sundays, but it's going to be around 2 or 3 each day, or each Sunday. So live call once a week, and it'll be a very leisurely more laid back environment than some of the mentorships I've done in the past, where there's a lot of concepts thrown at you in a 2 or 3 day a week window. So this will be a weekly call. So yeah, if you have any questions, again, hit me in any of the media forums. So cool. All right, awesome. Thanks. So yeah, so that's all I got for you guys. Peace. And again, I'll drop the link to my YouTube channel there. So if you are not subscribed, go subscribe now so you can stay locked in with everything. So that's all I got, and peace.